gas prices and why they are still up. They have ticked down since the beginning of the war, since that $4.50 a gallon, but still way higher than they were before the war began.
Yeah, there's an expression economists sometimes use, up like a rocket, down like a feather, in terms of how prices can move. So again, you can see gas prices quite closely tracking oil prices from before the war and even during much of the war as we got to this peak of $4.50 in gas prices. But now crude oil prices came down all the way back to where they were at one point, $72 a barrel. Now they're at 85, but gas never got all the way back down there. Part of it is the reason that I said, that simply retailers of gasoline are trying not to lower their prices, as probably most businessmen would try not to do. But also you've had refinery disruptions and other supply disruptions that have affected refined products like gasoline more than crude oil. But nonetheless, as you know, the U.S. is an oil exporter. We actually produce more oil than we use, and so higher oil prices do benefit our oil companies. And you can see here the impact. This is an index of oil companies, U.S. oil companies. You can see their stock prices are up almost 28% this year. They're making a lot more money from higher crude oil and higher gasoline prices. This is the S&P, up 9.6%. This is the famous Magnificent Seven, the Metas and Googles and so forth of the world, up 2.7%. And these are wages, up 1.3%. So in terms of winners and losers from all this, I think the record is pretty clear.